Hello, my friends. It's Tuesday, December 13th. I'm Marv Eisen of Timeless Dollar Trading Academy. And looking at the economic calendar, we got some good news pre-market, as the core consumer price index was forecast at 0.3%, going up 0.3%, and the actual report came in at 0.2%. So that cheered the market. But nevertheless, we have to look at the economic calendar for tomorrow, Wednesday the 14th, when Fed Chairman Jerome Powell is going to say a few words at a news conference, and those few words are going to move the market as well. Speaking of dates, on Friday, December 16th, is the December contract expiration date. That means that the ESZ, or MESC, if you're trading micros, is going to expire, and the new contract is the March 2023 contract. That's the H contract. So remember to roll over your charts to the ESH or MESH on Monday, or you could do it today. Nevertheless, let's go to our chart. And today I want to make a point about patience. And patience is a word that I use all the time in reference to trading. Let me take my gloves off. It's a little cold this morning here in New York. For those of you in warmer climates, way to go, guys. But anyway, we're doing all right in New York. This was Friday the 9th, and I want to show you something about the word patience, or the characteristic of patience, and why I use it so often. Look at the trading. Look at the candles. This is a 3-minute chart, and there are 4 points between each horizontal line. 4 points is $200 on one contract. But look at the volatility. Look at the volatility. So by being patient, sure, we can make some, we probably lose some, and that would probably mean overtrading as well. But look what happens if you use patience. Well, first of all, as you know, I use the trading zone calculation together with the previous day's close, and I mark these indicators on my chart together with my stochastics. But I know that the market is going to have a move almost every day. It's going to want to go somewhere. Now, typically, if it doesn't go anywhere in the morning or early afternoon, I know it's going to go somewhere later on in the day. And so I wait. And typically, after 2:30, 3 o'clock, the market is going to make its move known, make its direction known. Now, I use the trading zone to measure the range that prices are going to trade for the day. And prices don't always trade exactly within the trading zone, but the range is relatively accurate. And what I do is I wait to see when the intraday high or low is. Now, typically the intraday high or low is going to be put in within the first half hour to hour of the trading day. So what I do is I try to match my trading zone to the intraday high or low when I think that one or the other is applicable. Now, over here on the 9th, by early afternoon, prices were trading well above their open. They opened down here at 39.52, and they were trading up here, backed off to 39.65. And from that point, I figured that the high of the day had already been put in. Okay, the high of the day up here at 39.80. So what I did was I took my trading zone and I moved it up. And remember, I said the range is typically going to be fairly accurate. And I figured that the market was going to end the day somewhere around where my trading zone indicates the range is going to end at 39.32. And by the afternoon, I knew that the trade was to the downside, and I knew where it was going to end. Patience, okay? Very profitable trade. And forget about all this nonsense here. Look at this. I mean, most traders are going to trade this. They're going to trade it, then they're going to lose some money. Maybe they'll make some money. But this is a fool's errand over here, my friends. So patience paid off. And by the way, this trade was also relatively low risk because, look, it was a momentum trade in basically one direction. And let's carry that thinking through to the next day. Now here's the next day, Monday, December 12th, yesterday. And again, prices were volatile throughout the day, did shoot up by, let's see, just before 12 o'clock. And by early afternoon, I figured that the intraday low was not going to be revisited. The low of the morning was the intraday low, and I moved my trading zone up to where prices were at the low point. And by afternoon, I figured that prices were not going to revisit this area again. And so the trade was to the long side. And again, where did they end up? Just about at the trading zone forecast. So patience and having the right tools is going to lead you to lower risk trades and more profits. So that's my video for today. Thanks so much for watching. Marv Eisen for Timeless Dollar Trading Academy. If you want to get my trading zone numbers or even take my course at timelessdollar.com, I invite you to do so. Money back guarantee in either case. At any rate, have a great day, trade safely, use lots of patience, and I'll see you in my next video. Remember, Friday the 16th, roll your contract over to the ESH or MESH.